Laos is a country in Southeast Asia. It is a landlocked country which borders Vietnam, China, Myanmar, Thailand, and Cambodia. During the 19th century it was part of French Indochina. However, when it gained independence, it experienced a civil war between the royal government supported by the US and the communist rebels. After the Vietnam War, the Americans bailed out of the region and the communists managed to take power. Initially they pursued a Soviet state command-style economy, replacing all the private business with state-owned enterprises. This lasted until 1986, when the government decided to pursue economic reforms, similar to ones experienced in neighboring China and Vietnam. After the fall of the Soviet Union, Laos conducted more reforms. These reforms have enabled strong growth and foreign investment. Right now, Laos is a socialist market economy. This means that although the government follows Marxist principles, it still allows elements of the free market to flourish, and a significant chunk of the economy is composed of private businesses. For the last previous decades, Laos has experienced very strong economic growth, both in terms of GDP per capita and GDP overall, with an economic growth of around 7% a year. Despite this, most of its population works in agriculture. Its main industries include copper, timber, rubber, and tourism. When you compare that to Vietnam, it has much less people working in agriculture, only around 15%, and it has more developed industries such as electronics and industrial equipment. In addition, Vietnam has a big textile industry. In fact, if you check your closet, you can find that at least one of your clothes and footwear have been made in Vietnam. This is not the case for Laos. In addition, Vietnam's economy is more complex and diverse than Laos. As you would know, China is also a communist country that has experienced high economic growth due to the market reforms. The Chinese economic miracle has been mentioned countless times, from economists to universities and journalists. Although Vietnam does not have the same clout, there are still quite a lot of news articles about this. But compared to these two, there is barely anything about Laos. The main reason is that Laos is small. Firstly, Laos has only about 7 million people. Compare that to Vietnam, which has almost 100 million people, and China, which has more than 1 billion. This means that Laos will have a much smaller workforce and consumer base, therefore it is natural that major powers and big corporations will pay less attention to Laos. Likewise, Laos has a much smaller economy than Vietnam and China. One important factor is that Laos is landlocked. With regards to Vietnam and China, they can access the sea routes in order to export their goods. Laos would either have to go through China, Vietnam, Myanmar or Thailand to export their goods. Or they could just use the plane, but that would be very expensive and inefficient. A comparable country to Laos could be Slovakia in this regard. During the 90s and 2000s, Slovakia experienced a lot of rapid growth due to the adoption of free market ideals. However, I doubt you would find many details about this due to the fact that Slovakia has a small population, landlocked, and a small absolute GDP. More focus was placed on larger countries such as Poland and East Germany. Before the COVID pandemic, Laos was experiencing strong economic growth due to the fact that it is still implementing reforms and following the path followed by many Asian countries. It is still in this period, therefore I will expect strong economic growth for the foreseeable future. In addition, it is a very young population with a high fertility rate and a growing population. This is important especially in a developing nation, since a young and growing workforce will increase economic output and will generate enough tax dollars for pension and other social services. Furthermore, Laos's neighborhood is experiencing strong growth, therefore I expect Laos to follow suit.